Happy Thanksgiving. What we are going to be doing here is that we're going to make sure that you understand that this here is the one we're going to be looking at. It's a 595 call. It's a weekly. So what we're going to be focusing on is the 1125 right now. You can see here right now, MMTs on 1125, 595 put had plus 93% under the net change there. You can also see that the very same call for 1125 on the 595 is minus 50.91%. The last print here was 810, and the last print here. So what we're going to do is take a look as the weekly. You can see where they have lost 100% value going into the Thanksgiving rally next week. If we have a rally, we're going to be looking at how to steal the bid here. And we're also going to be showing you that that weekly put option has made a great move from these lows, $3.30 to 8.70 high. So this side ran and is inflated. This side going into the following week, 11/19/2011, the monthly options expiration just expired. So here we are on this 595 call. We're going to be watching where the lower end of that is and where the upper end of this goes. So we're going to be very coherent as to what the inflated balance versus the deflated balance relative to the equity trend, which we already have a special video series that was done today that talked about the weekly chart and about the austerity and everything else. So that's one we're going to be looking at. Another one that we're going to be moving on is to the $600 call. There's a $600 call. We have that $600 call in here that expires. You can see that that $600 call, the high was $14.50 and the low on Friday was $5.30 right here. And the high on Friday was $11.23. That means that the contract has almost come down $6 in value from the high. And that the very same strike price of the $600 put, which is going to be in this chart, it too, as you can see, the low of that put was at 440. The high on Friday was 1116. And there is the imbalances of the two trades for November 25th. Another one that we would be looking at is going to be the 605 call chain. And then we're going to be looking at the 605 put chain. And we can see that going into the turkey rally that this particular put is right up here and hit a high Friday on 118 of 13.49. And the low was 880. So that got up to the high value here. Remember, a weekly. We just expired the monthly. But now we're in the weekly. And these are inflated. Now, on the same token, right here, on this very same token, that the high was 1210. And that the Friday's closing low here was 3.50. They took out all of that premium on that 605 up and out of the money, which is $10 up and out of the money. It's up and out of the money. 594 right here is where Google closed. We can see the imbalances in these premiums. The put side going into next week is inflated, and this is getting deflated relative to the equity trend in general. The other thing that we're going to be looking at is the 610 call up and out of the money. And in the money, 610 put that got really good during last week. They took these put options for this calendar turkey week. They took those to a low of $8.11 and a high of $17.50 right here on 118. Yes, they did. They did. So that in the money put is getting stretched. So if Google goes higher, that put's going to go down, and ultimately that call structure is going to go higher. And I've concluded the imbalances of the turkey rally one that we're going to be looking at. Another thing that we're going to be looking at, though, is we're going to be looking at where some of like the 575 put is. See, they don't move a lot, but we can tell here that the 575 put that low was 80 cents now over here. And they had a move. That's at 575. The 580 put, which we're featuring, it too had a low of $1.31 and a high of $4.12 and a high on Friday of $4. So $1.31 up to $4 there on the 5. Now we already checked this one out. This one, the 590 put here, the 590 put below the market, that low was 235 and the high on Friday was 669. So we know where some of the puts have inflated in their value. All right. And the $600 put in the money, I think we already did that one. 440 is the low. And look at the high of the put side here. Look at the high. $4.40 is a low, and the high is $11.16. Yes, it is. So we know where that put side of that chain is, and that 605 put in the money, we already compared it to the chart. We already know that it's 1349 on 118 high with the 650 low back over here. I'm going to conclude the light holiday week that starts Monday. I've concluded the weekly call and put valuation chain. Clearly inflated and deflated relative to the weekly chart that was done on 11/19 of 2011. You will see the weekly chart on the home page of the website. Then from the weekly chart analysis, you'll see in its entirety the November Turkey Day, the November 25th weekly. And remember, next week, the markets are going to be closed Thursday, and there's only a half a trading day on Friday. So you're going to have less days, and it's perfect from the put call side getting marked down. It's a ripe opportunity. If that austerity is not in there, then there are some great opportunities. Once again, MMTs, I have concluded the call and put structure, mathematical imbalances, and how to make markets relative to the weekly stock trend on Google. Happy Turkey Day.